How do I start buying shares? For a lot of people, the world of stock markets and trading seem as strange and distant as Harry Potter or Narnia. There's a jungle of weird jargon and meaningless numbers, and everyone seems to have a different opinion about what you should be doing. But the stock market is for everyone, and you don't need millions to become involved. You can treat it however you want it, as a hobby, a way to try and make a quick buck, or part of a long-term plan for your future. Today, we'll give you a simple guide to starting your portfolio and some of the basic tactics that have proved popular over the years. It's important to remember that there are no certainties here though. No investment is 100% safe, and today's dumb idea could be tomorrow's stroke of genius. There's nothing you can do about this, but it's good to remind yourself all the same. Let's start with some jargon busting. Stocks and shares are basically the same idea these days. You can say you own some stocks, but you own shares in Microsoft, for example. So, stocks are the generic name, and shares are when you're talking about a specific business. These stocks are traded at stock exchanges. There's normally one major exchange for each country, but there are often many other exchanges that might specialize in specific types of trade. The US has three main exchanges: the NASDAQ, the New York Stock Exchange, and the American Stock Exchange, now listed as the NYSE MKT. The biggest companies are then listed in market indexes, such as the Dow Jones and the S&P 500. These are basically just data lists run by analytics companies or media outlets, saying what the prices of these companies' shares are at the time. When a company goes public, it puts some percentage of the company as shares and allows people to buy them. They are normally put on just one stock exchange. This generates capital for the business, enabling them to expand or invest or whatever else they might need the cash for. This first step is called an initial public offering, or IPO. Once this has happened, those shares can be traded on the exchange and the price is affected by demand. If people think the company has a bright future, the shares will be popular and this will drive up their price. If there are doubts or problems, people will want to sell the shares they have, so the price will go down. So, when you're looking for shares to buy, the general idea is that you want a company that is going to improve their current position. Huge companies like Apple or Walmart might make a lot of money and dominate their section of the market, but the question is, are they going to keep growing and improving, or will some other company start taking over their market? Trading stock is all about how a company is going to change in the future, for better or for worse. When you start out, you need to ask some basic questions. How much can you afford to invest? How much of this investment can you afford to lose? And what time scale are you working on? If you want to make money quickly, you'll need to take bigger risks, so you'll need to accept that you might lose your initial investment. If you have more time, then you can play it safe and aim for steady growth every year. Warren Buffett says the safest, most reliable investment you can make is to buy an index fund. This means you're spreading your investment across an index, like the Dow Jones, which includes all the major companies like Google and General Motors, etc. You're not betting on any one business or industry, you're just hoping that the whole stock market grows, as it always has. There will be dips and dives, but in the long term, the market keeps on growing. The good thing about this index fund is that they are low cost too, meaning you don't need to pay a lot of fees. For all your trades, you will need to go through a stockbroker, and this choice can be as important as the actual stocks you buy. If you want to fly completely solo, you will just pay a fee for execution, like a trading fee. For a bit more help, you can have an advisory service, or if you want to let someone else worry about the messy business of making money, there's discretionary management that lets the broker take complete control of your portfolio, buying and selling what they think is best. Whatever you choose, make sure you do your homework. If you want a discretionary manager, find out who you are entrusting your money to. And if you want to navigate your own ship, do your reading. Read the financial news and keep up to date on the industries you know or are interested in. This way, you might be able to predict when a big deal might be announced or a new product will be launched, so you can get in and buy shares before everyone else. There are plenty of apps and websites out there, and it's great to choose the fantasy trading option, where you learn how it works without putting any money in. If you would like more advice on investing of any kind, please give us a call at Holborn Assets, where we have over 100 UK qualified advisors who do this on a daily basis. So, if you're serious about investing, we look forward to chatting more soon.